Okay, let's start. So I'm Prabin, CEO of Micromobility Industries, and welcome you all for the first webinar of this year. We're going to have a series of webinars, so stay tuned. And today's webinar is with McKinsey. So McKinsey has been a very long time partner for Micromobility Industries. If you've been to one of the events, you'd have definitely met Kersten and Darius or somebody from their team. And McKinsey is one of the large management consulting firms with very deep knowledge of the space. If you've been in this industry for the last, say, 5, 6 years, you would have definitely read one of their articles. If you would have made a pitch deck, you would have definitely looked at their data. And then if you have gone through pitch decks, you would always come across McKinsey data in micromobility pitch decks, right? So they have they are the best to deal with such topics, right? And today's topic is electric two-wheeler market trends and funding in the space. It's particularly exciting for me because I'm originally from India, where two-wheelers are super popular, and the entire market is going through a massive shift to electric two-wheelers, right? And Kirsten and Darius will also talk about what's happening in Europe. For speakers, so we have Kirsten, who is a partner at McKinsey, and he's also leading McKinsey Center for Future Mobility, and he's also co-leading McKinsey's Micromobility initiative, right? And he's joining from Frankfurt. And Darius, he's an expert at McKinsey Center for Future Mobility, and he's also co-leading McKinsey's micromobility practice together with Kirsten. For today, the format, it's going to be about 35 minutes of presentation, followed by Q&A. For the audience, you can use the Q&A window on Zoom to put your questions. And at the end of the session, what we'll do is go through the questions. We'll try to get to most of the questions, but if not, we can take it offline as well later, right? So without wasting much time, over to Kirsten and Darius.
Fantastic. Thank you so much for having us. We are very excited to start off the webinar series for this year. Like Prabin said, there's also going to be more McKinsey webinars on micromobility. For this webinar, we're going to have 2 deep dive topics, but before we dive into it, I'd like to quickly say a few words about what the McKinsey Center for Future Mobility is. So the McKinsey Center for Future Mobility is really our quote-unquote think tank for all things mobility. You can see a few of them in my background. So we do not only cover micromobility, but we also cover other topics. We've got a team of about 300 people globally that do very little else except work on the future of mobility. In that team, we have a group of 45 people that do very little else except market modeling, looking at consumer preferences, trying to assess value pools and profit pools in mobility. And then we take all of that and bring it into our client engagements, our client work, and we also bring it into different publications and things that we bring into webinars like this, but also other formats of communication. And when I say client engagements, we typically work with 3 different types of clients. So we work with a lot of companies as Center for Future Mobility in the auto industry. We work with companies outside of the auto industry in anything that is adjacent, can be insurance, can be real estate, can be telco, but also many other industries. And then last but definitely not least, we work with a lot of startups and scale-ups that are part of the mobility revolution and that make all of these changes in the future of mobility happening. And here it doesn't matter if this is in micromobility, if it is autonomous driving, if it is shared mobility, or many other different things. And with that, over to Darius for the first content part of this. And as said before, very happy to take your questions afterwards and then see how we can be helpful.
Thank you very much, Kersten, and also thank you for the very warm introduction, Prabin. It's always great to be here. I think for us, it's now the 4th time joining a webinar. And I think indeed we have covered many topics, and for us the last remaining big topic was on two-wheelers, right? And that's indeed shaping the agenda for today. So what we plan to do is we want to give you a bit an outline on how we see the two-wheeler market specifically in Europe, but not only evolving at the moment and also in the future. We have brought along our consumer insights, want to talk a bit about how you can also win in the European two-wheeler market. We then would like to continue with an update on the mobility funding landscape. I'm very sure that many of you are interested how we see the funding landscape evolving at the moment and what we expect also for 2025. And then would like to end up on a notion of how we can support you to accelerate your business. Let's start with the two-wheeler market. And before we do so, and before we dive into the specifics, as always, let's quickly try to understand how does the two-wheeler market position itself within the broader micromobility landscape. Typically, what we do is we start here on the left-hand side. We segment light micromobility under the unicycle, sports, skateboard modes. We then go over to kick scooters and e-bicycles, two modes we've been talking a lot about the last year, right? Mainly shaped in Europe, in the US, but also in China. And then we focus today on the two-wheeler segment. For us, the two-wheeler segment is, of course, a segment maybe not natural to Europe because it's mainly dominated like by the Asian countries, China and India predominantly. But we have seen recently a lot of traction in Europe, and that's why also we are here talking about that market. And then we would end up with a segment that we call heavy micromobility. This typically includes rickshaws as also mini mobility, most notably here, the microcars, the quadricycles, and then the golf carts on the US side. If you look at the market from a global perspective, and if we look at the regional sales volume distribution, I think not surprising that the biggest bubbles you can see here on the bottom right-hand side, right? We estimate that India, China, and the ASEAN countries account for almost 80% of the global two-wheeler market. We also expect this to remain until 2030, simply because we see here the highest consumer traction and also the biggest governmental push, if you will. We have also brought along the EV share, so the share of electric two-wheelers sold in the specific regions. China clearly dominating here the market before India, and then we already see Europe following. And I think what basically the most structural difference is between the European, also the North American, and on the other hand side, the Asian markets is that the Asian markets are, of course, accelerated and driven by the smaller moped and scooter segments, whilst in Europe and North America, we rather see bigger motorcycle segments driving the market. We come to that in a second. On the other hand side, we have seen recently quite some traction also in LATAM, right? Also fostered by the shared two-wheeler market in Brazil, most notably. Whilst in North America, the momentum is still, so to say, sluggish, and we do not expect a big difference also in the next 5 to 10 years. That being said, let me go over and deep dive a bit more into the European two-wheeler market. How we typically would split the market is along 3 sub-segments. We start with the moped segment, so the typical type of Vespa and new vehicles. Some of you who know the technical specifications would describe that as the L1E and also the L2E segment. Vehicles with a max speed of 45 kilometers per hour, an engine displacement of less than 50 cc, and a market that is mainly driven, we will see that in a bit, by the Southern European countries. Then we have the scooter market, a market which lies in between the moped and the motorcycle market, which we describe as something in between the L1E and L3E market segment. Think about the Honda Activas of this world. That market has experienced quite some traction over the last 5 years because it basically addresses both use cases of both mopeds, but also long distance use cases of motorcycles. And then the third segment is the motorcycle segment, very popular here in Europe. Think about the Yamahas, the Hondas, the BMWs, a segment that is typically described by the L3E, but then also L4E and L5E segments. achieving max speeds of way more than 45 kilometers per hour, sometimes even 200 kilometers per hour, right? Full stop. What we see, and that's also the biggest difference to the other regions of this world, is that motorcycles and scooters make up a much higher share of the total sales volumes, right? We estimate that the combined market share of these two segments is at roughly 80%. Mopeds only account for 10 to 20%. That's, of course, a big difference if you look at that from a regional perspective to other Asian countries. Talking about market numbers, we've brought also along some historical sales volumes of two-wheelers, now specifically for EU27. And I think what is quite impressive, as I just said, was that out of these 1.8 million of sold vehicles, motorcycles and scooters account for roughly 80 to 90% of the sales volumes, right? That's quite impressive. But what is also interesting is to see that electrification only accounts, so that the EV share within the motorcycle segment is only at a roughly 2 to 3% share, right? So that's quite low as compared to the moped segment, which accounts for roughly 28% of EVs sold. When we look at the numbers historically, what we have seen is a relatively constant growth since 2019, which interestingly enough was also not very much shaped by COVID. So we have seen a quite robust increase over the last 5 years, especially when it comes to motorcycles. One exception here is the moped segment. We have seen starting in 2019 a somewhat sluggish or also decreasing market evolvement. The market decreased by roughly 5% per year. What we have seen in the market is a lot of people switching from e-mopeds or mopeds to e-bikes, for instance. So it's a bit of an intermodal cannibalization within the micromobility segment. What we've also done is we have looked into the top markets in Europe and have seen that Italy, France, and Germany constitute the largest electric two-wheeler markets in Europe today. France is an interesting market because here we have seen both electrification shares, but also the moped shares being the highest amongst all European countries. That's, of course, has something to do with the, so to say, mobility culture, right? France has always been a very moped-affine market. And we have also seen that consumers are particularly aware of electric two-wheelers, especially if you look into urban areas amongst the young population. In Italy, to give you a rough number, we estimate the market to be roughly 380,000 of vehicles sold. France, 280K, and then Germany following with 260K. Overall, we can say that the electrification share is also lower than what we see in the PES car segment, right? So today we estimate the EV share in the PES car segment at 16%. One reason for that being definitely, of course, that governments have a bit overseen the entire E2W segment in Europe. The focus of the last years was mainly going into cars, but also into electric bikes, which of course is a good thing. But we haven't seen that governmental, so to say, attention going into E2W, as also compared if you look into the Indian market, right, with the FAME 2 subsidies. That's something which we haven't seen in Europe and is one of the main drivers of that picture here. Now, of course, what we also have done is we try to understand how might the market evolve until 2030. For you, as a quick recap, what we always try to understand here are 3 things. First of all, how do macroeconomics, so specifically GDP and population, develop until 2030? Secondly, how might regulation develop? Think about cities banning cars from the city centers and therefore stipulating certain mobility behaviors. And then the third factor is for us always the consumer. So we ask consumers directly about which modes they're willing to use. And all of these 3 pillars in the end up in what we can see then here into these market sizes. Now, what we expect is that the market reaches by 2030 roughly 2 to 2.2 million in sales units. This would mean that the market, so the top line at least, develops similar to what we have seen in the past 5 years. But we have also seen, according to our market modeling, that the moped market is revamping again. So we do not expect that the moped market will decrease in sales volumes because of the electrification, right? So we expect that people, especially in urban centers, are willing to buy more electric two-wheelers, specifically electric mopeds. And therefore, we expect a turnaround already in the midterm for the moped segment. The motorcycle segment is a bit different, right? We have different drivers here. It's much more GDP and also population driven. People who tend to use their motorcycles for long distances for the leisure use case are still going to do that in the future. So it's much more of a stable market than, for instance, the smaller moped market. In terms of electrification, as I just said, we expect that the EV share in 2030 will reach roughly 15 to 20%, right, across these two segments. And that's always a number expressed in sales volumes. Now, as I was just saying, one of the main pillars of our analysis is always the consumer behavior. And what we do is we regularly ask consumers, as you might already know that from the other webinars, about their future mobility behavior, about their key buying factors and other factors that might affect their trip behavior in the future. And what is very interesting about the two-wheeler market is the fact that European consumers are very much aware and also very much considering the usage of electric two-wheelers. Around 85% of our consumers say that. Much more than, interestingly, the global average, including also Asia, right? If you ask consumers about the main, so to say, tipping points, so the key buying factors, why they would like to buy, or what is needed, so to say, to buy an electric two-wheeler, we often hear the answer, yes, please give me an extended battery range. I do not only want to move from home to my working place, right? So I don't want to use it only for commuting, but I also want to use my electric two-wheeler maybe for longer trip distances. I want to be able to also carry around cargo, which means I need a stronger battery. So the whole notion of battery range is important. And then, of course, a very important factor is also the seamless charging experience. Consumers basically do not want to think about the recharging of their privately used vehicles. And that's why they often compare the charging experience with what they know from the private car fuel-driven segment, right? Then other factors such as price, as you can see here, are important, but not the main decisive factors when it comes to electric two-wheeler purchases. We have then basically asked more or less the same questions on a country basis, also in France, Italy, and Spain. And what we've seen is that, again, here, the French consumers seem to be those with the highest consideration of electric two-wheelers, much more than Italians or Spanish are, right? If you look here on the right-hand side, we have seen especially a purchase intent of those people living in urban areas, especially true again in France, where we've seen like 87% of consumers telling us that they would like to purchase an electric two-wheeler in urban areas. That's 15 percentage points more than the country average. We have also seen a higher purchase intent for people with a higher household income. As I said before, one of the main determinants also of our market sizes is always GDP and is always the per capita income. And lastly, battery range expectations range somewhere between 90 kilometers to 100 kilometers. The good thing here is, of course, that most electric two-wheelers already achieve this. So that's, I think, something that we are already bought in. So maybe a few thoughts of so to say, thinking about how to win in the European electric two-wheeler market. What do we basically learn from consumers and also from our market sizes? We believe that making the right design choices, right, that address use cases within B2C and B2B are very relevant. So consumers are different. So private consumers are different than consumers in a B2B segment, right? If you talk to consumers now, besides the whole battery notion, this can be very, very simple adjacencies to your two-wheeler, right? This can be smartphone mountings. This can be a very comfortable driving positions and handling experience. But on the other hand side, we also know that B2B customers are very much different. They require often a cargo space, a battery lifetime, which is much longer. And therefore, the right design choice is the first thing. Secondly, and I think that's something which is probably not Europe specific, but globally true, consumers want an integrated charging and service ecosystem, right? So they expect the right solution at the right time, starting from home charging to battery swapping options, the possibility to get an after-sales service wherever you are, right? That is also something which we experienced in many conversations. I already talked about the third point, the battery range, and then also the seamless charging experience. And then what we've seen specifically for Europe is a focus on premium products. So consumers are willing to invest more into their electric two-wheeler, right? Given they are able to ride a certain premium brand. And as I just said, given also the premium service when it comes to after sales. So this is basically a very concise way of telling the story of how to win in the European market. That would basically be our conclusion of what we learned. Kersten will now continue to give you a bit of an update on the funding landscape. I think something which is also relevant, especially for the two-wheeler segment.
Fantastic. Thank you so much, Darius. Now, on a totally different note, but obviously related and probably an interesting topic for many of the companies present here today, funding. So we all know that fundraising is a part of the day-to-day life of every, at least younger company. And we also are aware that the last couple of years have not necessarily been easy. Many different reasons, obviously the overall geopolitical situation playing a role here, but then also the fact that maybe there was a bit too much money in the market, ultimately leading to the fact that if you will, the hype cycle ended a bit and some of the valuations weren't able to be held up anymore. However, and that's the positive note that we want to leave you with, we do believe that it's actually starting to become much, much better. So we do see that there is quite a lot of traction now. We do see that there is quite a lot of interest again to invest into mobility. Why? One, because there are some success cases out there, some companies showing great results, both on the technological side, but then also on the commercial side, profitability happening in quite a few, especially shared micromobility companies. Then also a lot of growth happening again. We do see that regulation also continues to be favorable. And we overall expect that there is an increase in M&A activity of strategics coming back into the market and looking at companies and ultimately making acquisitions. So therefore, we do see that there is quite a lot of activity, and we've asked ourselves, what does it take to be or to increase your chances as much as possible in order to be successful, right? So like I said, we do believe it's back. We do believe the confidence in mobility is higher compared to previous years. I'm not saying that it's on the same levels as we saw it in 2020, 2021, right? But it's definitely better than in the last 2 years. However, we also see that there is definitely a higher bar that a company needs to meet in order to be able to get funded. And this takes traction. It takes a clear path to profitability, but it also needs to show that there is a clear roadmap towards returns for the investors. But I would like to go a bit deeper into this. So basically, we've asked a bunch of investors out there what it is that they value. So what do you need to show in order to be able to receive funding and in order to be eligible for an investment? There's nothing new here. But our framing is always the bar that was previously relevant for around has actually been is always now relevant for at least one round earlier. What are we saying by that? If previously you needed to show certain things for a Series B, now you would want to show this to an investor for a Series A or even earlier. And the same logic continues throughout the funding journey, wherever you might stand. Now, what does it mean? Customer acquisition, revenue generation. So the companies out there, especially for the investors out there, especially for early stage companies, they want to see deals. They want to see units being sold. They want to see revenue being generated. And in an ideal world, this is also combined with positive unit economics for these units. So not just user generation and some revenue, but actually also positive traction and a clear path towards profitability, not only on a per unit basis, but especially also on a basis for the entire company. And then obviously they would also want the entire KPI system to be there. And then when we talk about trends, so yes, we do see that money is being invested again in 2025, and we do think so. It's a good time to sort of start thinking about fundraising activities here again. However, there is also going to be a certain conservatism on valuation. So while there is going to be money available to be invested, we don't think that the valuations are going to be anywhere near where they were in the boom years, if you will. But at least there is money. So last year, I think it was difficult to find money and the valuations weren't good. This year, at least the money should be back, and we are expecting to see some of the money being invested. Now, to be a bit more concrete on success factors that we think are important, and we think it's always a combination of what you need to have in the story, but also how you need to approach it. So in our view, having an understanding of the market and having a fact-based rationale why a market is this big overall, but then also what is your realistic market share. So showing a big number for TAM might not be enough. I think it does take more granular assessment of why you think your part of that TAM is actually this big and why you think it is addressable. And just showing a big number is not going to be enough, but there needs to be a clear rationale why you expect that market to be attractive to you. Then why is your product, why is your service actually breakthrough? Why is it unique? How does it differ from the competition? Because we are 100% sure that most of the companies will already have seen a ton of different pitch decks, right? And I always like it when people, especially at the Micromobility conference, they show me on their phone an early sketch of a product, right? But I think this always takes a certain unique value proposition in order to be there. And then I think we've said business plan, we've said KPIs already way too often in this session, but I do believe that having a clear path how you can achieve not only positive unit economics, but then also scale up the revenue and make sure that your product is scaling, is generating revenue, but then is also creating profitable growth at the same time is very important. And then on the approach, we do believe that partnerships and a network is very important and has probably become more important over the last couple of years. But then there's also certain elements that you need on the procedural basis, where you have a plan and where you leverage certain documents, certain assets that you have in order to be able to actually meet the bar of the investors. And maybe we go into a bit more detail on that last item. We actually do believe there is 4 things you need. It's ultimately the market and financial modeling, which is a bit what I said earlier about TAM, SAM, SOM. So an understanding where does the revenue come from, what is the market potential, but then also how does your cost structure relate to it, and what is the financial performance going forward. A proper analysis document that ultimately shows why your company is differentiating versus the rest. An equity story, so your narrative, your document, your pitch deck, if you will, that you bring to the investors. And then also a transaction concept that shows how you actually want to allocate your funds, but then also what you want to do beyond the current round, and how that sort of will go on over the next couple of years. And then last but not least, and this is a bit something that to us goes in parallel, is the investor outreach. So who do you actually reach out to, understand who are the players out there that are interested in mobility investments, in your particular area of the mobility ecosystem. and then ultimately trying to tailor all of the materials we were talking about on the left-hand side to that respective investors and to the way how they like to be approached. And you see these dark blue and light blue dots here on the page. I think it's usually a combination of an investment bank and a consulting firm, and both of them together are able to sort of facilitate this entire process. Whenever we work with our clients on fundraising, there's usually also an investment bank involved, and it's always quite a complementary activity. Amazing. Having said that, maybe a few last words on how we typically work with mobility companies, and then we can also get into a discussion on your questions. So just a few examples. We have obviously done a lot of work in the micromobility space, working with companies on strategy review, working on business plans, but then also helping companies raise money. And then last but not least, helping companies accelerate their business. So we are doing and have done a few engagements where we are supporting companies and simply growing faster by supporting their sales teams in order to generate more sales. And this can either be launching in new markets, it can be launching new products, but it can also just be speeding up the process and basically speeding up the lead time and the development time of new leads. And then last but not least, we are excited. Let us know, right? We're excited to have conversations with you at whatever stage you're in, whatever questions you have. We are excited to help you accelerate your path to profitability, boost the business, but then ultimately also make sure that we can improve the likelihood of success of your company. So whenever you're interested, reach out to us. You know where to find us. And it doesn't matter if you're an early stage company, a late stage company, anything in between. Always very happy to have a conversation, and very much looking forward to receiving your questions and going into the Q&A now.
Great. Thank you, Kersten and Darius. So for Q&A, you can drop your questions in the chat. I think we already have questions coming in.
Yeah. Darius, you want to take the first one on volume?
Let me open them from Roman, right?
Yes, that's the one.
Thank you for the question, Roman. Yes, that is true, right? So it's a good question to put everything into perspective, right? So the e-bike market indeed outsells the E2-wheeler market by far. That is something which is true in Europe. That is not true in Asia. And if you look at that from a value pools perspective, I think we've been talking about that in the last webinar. Happy to share the material. There is like a 3 to 5x difference in value pools, right? That is one because so we always calculate in a per kilometer basis. We have seen that utilization and also kilometers driven by e-bikes are typically longer and higher than you would see that in the e-moped and electric two-wheeler segment overall. And then the prices for e-bikes are also not so much different anymore if you think about the premium e-bikes as compared to e-mopeds. So indeed, there is a difference in value pools. Happy to share further material, Roman. Feel free to reach out via email or LinkedIn as always, and happy to do so.
Super. Thanks, Darius. Let me take the next one from Alex. And Alex is asking if we see any trends around multi-mobility where electric micromobility is being used for a portion of the journey. I think the answer is yes. So we do see that actually in quite a few cities, especially with shared bicycles or also shared e-kick scooters. Maybe for mopeds a bit less so, because we typically see that the distance that is traveled with these shared modes is going up the heavier the form factor gets. So the average distance you would travel with a scooter or a bicycle is lower than the average distance you would travel with a shared electric moped or with a shared car. But nonetheless, there are quite a few schemes where actually cities are working to create better drop-off and pickup points close to public transport stations. One, and then two, where they actually even try to include that in the price or get the chance to have a combined ticket between public transport and their sharing systems. And we actually do think this is a great way of making public transport accessible to more and more people. Simply because you can ultimately then access public transport, even though you might not be living as close to it as you would want to walk in the morning or could walk in the morning. And then last but not least, I think another sort of common intermodality piece is if you want to use a car sharing vehicle, you actually use the scooter or the bicycle to get to the car sharing vehicle if it's parked too far away. We've seen a few of these journeys happening in combination there as well. But I think the most common one is probably the combination of a shared micromobility device and then public transport, because it just makes the way to and from the public transport station easier and also faster.
Thank you, Kersten.
Darius, you want to take the next one, or the next two ones actually, from Bruno and Christoph?
Happy to. Bruno, good question. I think that's a typical chicken egg problem, right? So if we ask consumers about what are the modes that you would most likely subscribe to, then we always see two-wheelers and e-bikes, right? Because the upfront costs are higher than for an e-scooter, for instance. And that's why the affinity or the willingness of people to use subscription models is higher. That being said, I think at the moment we don't see really the offers in Europe, and that's why we haven't seen the subscription market for electric two-wheelers or two-wheelers overall ramping up. But there is indeed like if you will, like an innate consumer interest. Then the second question on the most hesitant customer segments. I mean, so I think that's a bit of a multifaceted answer, right? I think we haven't seen that traction in rural areas, right? So people who need to use their two-wheelers/cars for longer trips, who also need to cover more use cases than, in parentheses, only those short distance urban trips. There we haven't seen traction at the moment at all. And then it's also a mode that is particularly relevant for young people who are affluent, right? So who can also afford the upfront costs of an electric two-wheeler, who have maybe also the possibility to charge at home. So on the other hand side, more like middle-aged elderly people living in the outskirts, we have seen here the customer segments that are more hesitant.
Fantastic. Let me pick the next one on funding. So the question is if we provide funding support in seed stages. I think the answer is yes, but it's probably a different support model than how we would support a company that's going for their Series A, B, C, or even further series, or even an IPO. So what we are always happy to do is support companies, one, with our market data. So all of the data we have on market sizing, on consumer adoption, but also other different things. And there is always a lot more than what we make publicly available, because we always try to only show sort of the tip of the iceberg in the publications, but there is always more. So you can always reach out to us and ask for a certain cut of the data, certain customer preferences, or whatever you think is useful. That's number one. And then number two, we're also always happy to help out with a review and a live discussion of the equity story. So when you've got a pitch deck, send it over to us. We're always happy to sign an NDA first, and then happy to give you feedback on that document. And this then usually also helps us with a few ideas on how some of our data points that we have in our database can be helpful. And then lastly, we're also always happy to discuss with you sort of the strategy, if you will, right? So who in the network should we talk to? Are there a few people maybe in our network that could be interesting to have a conversation with? So we would typically not go as far as do a full equity story support or a full vendor due diligence kind of in the seed stage, because that feels a bit outdone or a bit sort of overdoing it. But as I said before, there's a few things that we're always happy to help with and always happy to do, and just reach out to Darius or myself, and then we're always happy to help. Darius, you want to pick up Raymond's question?
Let me see. I think I would need to understand, Raymond, what you mean by HOW. Maybe you can clarify, and then I can answer
The
that
question
one.
is how they're differentiating, Darius. So what is the digital innovation that companies use to differentiate their product offering?
All right. So I think, like overall, if you compare that market now to the bike market, right? I don't think we have seen that level of digital innovation as we've seen it in the e-bike segment, right? By that I mean we have seen many players in the e-bike segment trying to, for instance, implement safety measures. Think about GPS location systems or automated emergency calls, right? We have also seen a lot of traction in the e-bike system when it comes to the maintenance of the vehicle. So predictive maintenance, apps that notify you when you have to maintain a vehicle. This is something which we haven't seen in the E2-wheeler segment yet, but I can well imagine that's again a bit of a chicken and egg problem because, of course, if customer traction, if sales volumes ramp up specifically in Europe, right, we do expect and we can expect that this also then takes over and spills over into the electric two-wheeler segment. Then I saw a question, Kersten, happy to take that one from Stuart, right? On the African E2-wheeler system. So yes, we've been looking into the market quite intensively. I think the biggest difference to the European and other markets is in the end, how can I ensure a seamless charging experience, right? So the whole notion of decentralized battery swapping options, or the notion of let me pull up decentralized boxes that provide batteries, right, is very relevant in Africa because of like electricity shortages, because of the missing infrastructure. So we have seen fantastic innovation, especially if you look into a couple of Central African countries. But these companies always tell us, yes, the consumers are also willing to buy our products, they're also willing to pay more, but we need to ensure them a charging experience that is, so to say, reliable, especially because we know that a lot of the African segment is driven by the B2B segment, and therefore it's vital, right? And then let me take on the other question from Alex. If we have the same analysis also for e-bikes and standing scooters, short answer is yes. Feel free to reach out. We've been basically having the same type of webinars than for e-bikes the last time, and also on standing scooters. So happy to share and to get in touch.
Perfect. And then let me take the next one from Jita. So if we have any successful experience in Africa, startups or big companies to launch micromobility products. So we have worked with a few of our colleagues locally and basically have supported the teams there. There's always a local team involved, obviously, if we do something in Africa, because neither Darius nor I could seriously claim that we're experts on the African micromobility ecosystem. But if you're interested, feel free to shoot us a note afterwards, and always happy to connect you with our local colleagues. Always happy to help and lend a hand. And we'll always make sure that this is a global effort where we then bring in the folks also from Europe and the folks from our team that have the access to the data and all of the insights. Darius, you want to take Roman's follow-up?
Happy to. Actually, let me like two follow-ups even. I love it. That's a good conversation. Thank you. First of all, from you, Christoph, a perspective on three-wheelers. So we have, of course, as Kersten just said, colleagues sitting specifically in India, right, who look at tuk-tuks and that whole market. So you would basically, if I want to give you an answer, then the answer is yes, but it's maybe not Kersten and me for now. But I'm very happy to follow up with you on that. Just shoot me an email and I'm happy to answer. Then Roman, let me look at your question. Players in the E2-wheeler space, if you see any patterns. Right. So I think the answer to your question is there is definitely a pattern in terms of how these players market their products, right? How they want to differentiate, because they cannot do so via the vehicle prices. They cannot do so by offering an extended charging infrastructure. But what they do is they say and claim that they, of course, offer the best quality premium products, including also the after-sales services. And we have seen that actually also in the e-bike segment. And in my opinion, that's also going to continue in the electric two-wheeler segment. So a lot of these players also try at least partially to produce some of their components in Europe, right? That's also one of the main differentiators. and therefore it's often the notion of quality, of a premium branding that differentiates the European players to the ones in Asia. Then I see Claudia. Yes, thank you, Claudia, for the message. I think I got your LinkedIn message too. Happy to have a chat afterwards.
Perfect. I think with that, we're through with the questions. Any last minute additions? Anything else you want to know? If not, you know where to find us and how to find us. Always happy to have a follow-up and have a dedicated discussion on your questions.
Perfect. I'm not sure if there's any other questions coming in. Any last questions, please drop in. If we still have like another 10 more minutes, I have a question on the charging infrastructure. So if you look at Asia, there's a lot of charging battery swapping infrastructure for electric two-wheelers, right? We don't see a lot of those in Europe. Do you think as the market grows, we'll see such a battery swapping infrastructure in cities? It is also linked to the fact that I know that some of the micromobility players that had scooters, they tried to have such swapping infrastructure, and that did not go really well, right? I mean, so do you see this happening in the future as the market grows?
Kersten, do you want? Should I? So I think probably that's a very good question, right? And that's always what I try to describe with this chicken egg problem. I think in Europe overall, we do see a bit of a so to say segregation or a movement that basically, unlike in Asia, players first of all try to send out their products, right? But they do not think further. I think what Ola did and Gogoro and other very successful players in the Asian market is they thought about it in parallel, right? So they thought about it, okay, let me get out an electric two-wheeler, but how can I also ensure that my customers can actually move with that, right? And in Europe, it's maybe also a matter of we haven't seen the traction in sales yet. Therefore, the upfront costs to also invest into charging infra is simply too high. And I think there are two ways on how to solve that. So either you basically as a player do the pre-investment, which I think is not always easy, and then maybe the solution is to invest into that into simply like core urban areas, right? To start with something where also the highest demand is, or we do it basically similar to the PES car market, where we have seen also governmental help and subsidies going into charging infra, and then it's always a bit of a public-private type of collaboration.
Cool. I think we have two more questions there in the chat.
Right. Happy to take on the one from Svante. Thank you very much. And the question is about where have we seen the most E2-wheeler friendly government and subsidy policies? I think so. So I think the French, as I said before, and especially, so let me start differently. I think it's oftentimes policies coming from a city basis, right? It's not really policies coming from governments, as we have seen in Asia. And then I think you also have to differentiate a bit between subsidies, let me call them like pull factors, which pull you to the electric two-wheeler market, and then also push factors, which basically make you use two-wheelers because you lose the alternatives. And I think we have seen a great, so to say, match between the two factors in French cities, in Southern European cities. Of course, also consumer adoption is there. But, and that's a bit the big but, unlike in Asia, where it's not only a city-based thing, but it's also basically implementing nationwide subsidies for local electric two-wheeler production. This can be through tax incentives or other incentives, right? That is something which probably misses here in Europe. We have seen this in other micro segments. Think about e-bikes, for instance. but not so yet in electric two-wheelers.
You want to take Jack's question on the UK and regulation? I haven't seen any recent updates, but Darius, maybe you have.
Neither, to be frank. Nothing new.
Okay.
Great. I have, if there are no other questions, I have one last question. So specifically for the electric two-wheeler market, we see a lot of brands in Asia. Do you see new brands emerging in Europe? Or do you think the void will be filled by players from Asia?
I think it's going to be a combination of both, right? I think we're going to see some of the Asian players coming into the market, either via a simple market extension or maybe even via an acquisition, right? So I think we've had a few conversations whether an acquisition of a European company, an established European brand, could be a good idea or not. I think it might. Same as with electric cars, I think it's a nice parallel. I do believe that the incumbents will also come around at a certain point in time, right? And find out that and they actually have to convert eventually, right? And then that people want to electrify. I do believe that it's then going to be a question of who's got the better product versus who is quicker in establishing the market footprint. And for sure, the incumbents do have a strong footprint when it comes to their dealership structures, their network, but then also to brand loyalty of customers. So I think we will see both types of plays, both the incumbents electrifying, but then also new players coming in from Asia being successful in the future. And there will be a coexistence of different players.
And maybe to add on that, right, it's also a matter, Prabin, on who is your target customer. Is it the one who is focusing on a premium product driven in like core urban areas? Then probably it's rather the local European player. Or is it the, let's say, young teenager that is looking for an alternative to the private car? So he or she is more cost sensitive, but is also willing to use these vehicles in a town or in rural areas. And then, of course, Asian products, which are probably also made for these like type of income groups, are more useful, right? And probably, as Kersten said, it's like a coexistence based on basically your customer segments, which are very different in Europe.
Perfect. So I think we've almost reached the end of the session. So thank you, Darius and Kersten, for taking the time and sharing amazing insights. It was very insightful. And for the attendees, we have an event in June. So if you come to the event in Brussels, you can also meet Kersten and Darius at the event. I'm also looking forward to what McKinsey will present at the event as well. So thank you so much for the session, and thank you everyone for joining.
Thanks, everyone. Have a good one.
Thank you very much.
Bye.
Bye.